Telkom is worthy of discussion. It's controlled by the South African government, provides fixed fibre and mobile services, and has done relatively well.
Yeah, I mean, I say it's controlled by the South African government. If you take the direct holding plus the PIC holding, and it's got that SOC in its name, which stands for state-owned company. So, I mean, you've got to take it at face value. But yes.
Market cap. 39.5 billion rand, price to earnings ratio of 16.1, and a dividend yield here of 3.5%. Let's just get the share price graph up right at the top, and you can't argue with that.
It's had a great run in 2013, and that kind of took a lot of people by surprise because it wasn't in a happy space then. CEO Sipho Maseko has done a great job. He's done a lot of OPEX reduction, so shoring up profits by reducing costs rather than growing top line.
And if you look back at that graph, 2013, we are in a much better position. If you had bought then, Gary, made a lot of money.
Oh yes. I remember Viv Governor coming to me and saying, you have to buy this thing at 13, you're crazy not to. And I went, right, that's Telkom, you can't buy that.
Oh, you didn't buy it?
I didn't buy it. But yeah, it's been a fantastic performer. And like Paul says, I mean, they really embarked on it was about a 3-year turnaround strategy where they just, absolutely ripped everything that they didn't need out of the business. And I think it's a business that sits in a much better position than it did. But I think the challenge for it is exactly as Paul says. It's going to be trying to push that top line now and try and take market share in the country. We can see that they're aggressively doing it. So there's this free me promotions that they're doing, which is an incredibly aggressive cost comparison. But if you read what the other competitors, the likes of Vodacom, are saying about it, while you're discounting your data price to try and boost subscriber sales, Vodacom found in their base, 60 to 70% of their customers use less than 100 megs a day, which one speaks to the enormous potential of data growth, but also says that the more high-end, very data price sensitive customers, perhaps are not there, and they're not going to get the growth coming through.
Well, we haven't taken advantage of the
we've always
Telkom
been a bit
investment
skeptical of it, and we've worried that declining ADSL sales, the fact that they didn't really take advantage of their powerful position to get a lead in fibre is a problem. ADSL lines now starting to decline because obviously people are getting fibre. The mobile business, to be fair to them, has stabilized, and it's got some nice year-on-year sequential growth, but I do worry, like Gary says, that it's because of aggressive price-based competition, and they continue to pay severance amounts to reduce headcount. There's a lot of moving parts, but at least it is normalized now in terms of its valuations, so it's looking more attractive. But I'm inclined just to say
not hot.
I still think there's risk to earnings.
Also they're not hot. If you look at just the EPS delivery over the last couple of years and the expected delivery, it's vastly different. So the swings that you're going to take are very big. So I think there's an element of risk in this company that is perhaps not being priced in as well.
So apologies to Sipho Maseko and his team.
Great,
not hot from our
great job so far though. But and I think if he can continue and improve the delivery on the top line, it will definitely be one that's very interesting.
So watch it carefully.